TraderMerlin Show. Welcome to Groundhog Day. Yes, another market up day. Just keeps on trucking. Unbelievableness out there. We'll look at a bunch of charts on today's program. Of course, for those of you who are new to today's program, click that subscribe button. You know, we do the show every day, Monday through Friday. And yes, as Chuck says, light audience today. But you know what? It might be, it'll probably pick up as we progress through today's show. So welcome, everybody. Hello, Chuck, Thomasina, Ivzy. Good to have you with us. Terry, Big Eb, Gayer, and others that will be joining here shortly. Our guest for the show today is no stranger to coming on programs like this. Not necessarily this one. He's been on one time before. We're going to have Jeff Manson on the program right now talking about market analysis. And boy, I'll tell you what, he's got a lot to talk about. How you doing, Jeff?
Hey, I'm doing super. Thanks for having me.
Always a pleasure having you on, especially because I know you're a guy like myself who we kind of just love talking about markets. You know, some people are sitting at the bars talking about motorcycles, fast cars, and hot women. We're like, yeah, man, you see that chart of overstock this week? You know, nerding out over here. So glad I could have a fellow nerd with me to enjoy it. How you been?
Hey, I've been doing great. Getting a little stir crazy. I'd like to get out on the road and do some traveling again. But, just working from home, doing XLTs, kind of doing live trading, working some other business on the side, and a lot of it around trading. So been a lot of fun.
Good.
A lot of fun.
I mean, you know, hey, we always got to keep ourselves busy. I guess the beautiful thing about financial markets is we can do it from anywhere, as I can see you're working from home today, so happy to have it. All right, let's start off with the overall market. I've had a bunch of different listener questions pertaining to the current market as it stands right now, projections and forecasts, and I'm not one to do major projections and forecasts. I'm really more of a short-term guy, so when someone says, hey, what do you think the next 6 months, 8 months are going to look like, I can offer my opinions. As those that know, back in February, actually it wasn't February, I believe it was back in June, I had a forecast for the market selling off. Clearly, I was wrong because it doesn't seem to want to sell off. What are your thoughts on where we're at right now and where we may be headed?
Well, my thoughts are clearly more bullish. I think we're in a phase which we call a melt-up phase, and for the next 18 to 24 months, we may even see the S&P double in size, okay? So this is that phase that everybody says no, 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 until you're in the last final stage, and you're going, oh, man, this thing's parabolic, and you're afraid to get in at the point. So since October of last year, I've been talking about the markets in this melt-up phase. And of course, we had the coronavirus and the correction and that thing, but and the market has resumed its trend. You know, thankfully, they put in another $1 trillion into the market. And of course, you put $1 trillion into my bank account, the market's going to go up. So my thoughts are very bullish on the market, new technology, new stuff. We saw a lot of this fear and uncertainty in the Y2K bubble when the internet was coming out. And it wasn't until the last final 6, 8, 10 months that the market just kept going up and kept going up. And then we had a pretty big correction. We still have some big bumps in the road, and, the commercial properties are probably going to start dropping like crazy. So some investment things like that. And looking at those different cycles in history, I'm still very bullish. I think we're on a melt-up phase again with the new technology. Pay attention to not just the big high flyers, sexy stocks, okay, but start looking behind the scene at some of these other stocks that are really coming out of the woodwork and could really start making some bigger moves.
You know, I'm drawing on the charts here as we speak because you talk about a melt-up potentially coming. I've got the Qs, the triple Qs on a monthly chart. And just to kind of put this in perspective for some of the viewers out there, I wanted to show you kind of where we've come from and how much things have moved. This is the NASDAQ 100 that you're seeing here. In the last 5 months, the NASDAQ 100 is up over 66%. That's an unbelievable move by any market stretch. And unfortunately, I don't have all the... Let me see if I can go back. Unfortunately, the QQQ started in 99, so I won't be able to go back further and see that big run up there that led from the late or early 90s. This is one of the biggest market moves up, and a lot of people were talking about how difficult it was going to be back for us to get to these all-time highs in the NASDAQ 100 because that was the dot-com bubble. You can see, folks, if you're following along at home, we went from that peak in 2000. It took us how many months is that? It was 201 months. I don't know how many years you want to call that, but it's 17 years to get back. And ever since we broke through it, I would argue that we're already in the melt up. I mean, this move, especially the most recent stuff, because of what's going on with Amazon and Microsoft and the FANG stocks, have just vaulted it. It's the biggest bull market run we've seen in 5-month period ever.
That's exactly right.
So you think more?
Yeah, especially on the like the S&P and the Dow, they haven't participated as strongly as what we're seeing on the Qs. I do think that the there is we will start to see that parabolic move, and generally, and you have to keep in mind during the last melt up phase that we had, there were 5 individual corrections of almost 10%. On average, it was about 10% each one of those corrections. We've already had 2 of those 10% corrections, bar the keeping the coronavirus dip, as we might call it, out of the way. So we're still expecting a few more of these big drops, and as they do come into play, really keep in mind where that 10% mark is. Now, it may go a little further, maybe a little shallow, but overall, the last melt up we had, we did have 5 corrections during that phase as the market doubled in size.
Yeah, it's kind of actually I'm mapping them out here, and for those that are following along with my drawing, I'm drawing on just the ones that are pretty obvious. And actually, I do see 5 on here. I see one in mid 2016, 2018, 2 in 2018, 1 in 2019. Of course, the COVID one would make 5. But interesting that he's got such bullishness on these equity markets going forward. One of the things that would be kind of cool is. You were showing me your screen earlier. I don't know if you want to share your screen because you have a different analysis. And I think that one of the things people get out of this program is certainly how others view the markets and what information they look at. So share your screen and just kind of walk us through what you look at on a regular basis with regards. Yep, there we go. Perfect. Guys, this is Jeff's screen on here. I'll put his name across the bottom so you know whose it is. This is Jeff Manson sharing his screen. You got... I see similarities to what I'm looking at, which is adding on some supply and demand zones and little turning point areas. But you're using some trend lines on here, which look to be drawn different than I would draw them, which is totally fine. And also these circles. So what am I looking at here on your charts?
Well, basically what we're looking at this circle here is that, I went back in history and started looking at each time we had this move up and then a percentage retracement that resulted in about a 70.7% retracement. And throughout history, as I'm going to decrease the bar spacing here, they tend to come in groups of 3 before we have a sizable correction. Okay, and throughout history, the 70.7, you didn't close below that, another 70.7, and the 70.7% retrenchment is a little bit different than what is normal. Okay, but when we see that, it tends to have some of the longer running moves behind it. And going back, I think this one here takes us all the way back into 2017 where we had this. So in my perspective right now, we're right about this area right here. And we can see that just the percentage gains, the number of days it moved up, and this going into the end of the year, this is kind of what I'm halfway anticipating. Okay, it might go into like a March or anyways, but I think we're in this one. We've just gone through these phases, and we might be kind of right in the same picture on the chart here, expecting a pullback. Okay. Now, having these very similar patterns and the same group of movements, as we come back over to the right-hand side of the chart, this is what I've been sending out on my Twitter feed every day, is just kind of an update and looking at these forecasting points. And we started this a little while ago as price was just coming off the 70.7. Again, this is a 480-minute chart. So we're now up basically 337 points. When we start going back and looking at what was the average point move up off these controlled moves, we see that basically from this start to this start, roughly about 500 points on the S&P. And then we come back over here and we take from the low right there and back up. And, we're looking about 700 points on the S&P, 500 points, and now we're at 300 points. So we're just trying to take the average. We still have a little bit more to go. My projection, about 34.45, 35.26 are the next milestones to get there. And we can see the all-time high at 33.97. Today, we just filled the gap.
Mm-hmm.
I was expecting a little more of a pullback, and during the summer months, it's difficult to trust these markets at all. I mean, every one of these drops that we had or these pullbacks were, like, okay, the sky is falling. I mean, if you got sucked into the small picture, you would have really tried to short and maybe kept that bias, and the next morning just ripped all the way back up against you.
Yep.
One thing to keep in mind is when we start watching the activity during the day is a lot of these drops are very quick, very fast. To me, that implies that there's just nobody buying. It's not that people are selling, okay? And they happen so quickly, and they, just to be prepared for them, each one of these little pullbacks based on the prior swings have all resulted in about an 88.6% retracement, except for this last one, which was right about at 70.7, and now has launched it on a smaller picture.
Mm-hmm. Yeah, I'm you. So you got all these forecasting lines up there at the top. So you got that all-time high 33.97, which you marked out at 2020. Those other colored shaded areas, are you using? I know you're a fib guy. Are you using fib extensions to try to target those potential once it breaks out points?
Yes, I was.
Okay.
And the Fibonacci extensions are used from different swing high-low points, and I generally will have a 50 simple moving average on there, really to give me the high to low, kind of keep it consistent. Mm-hmm. And I'll measure from high to low and then project up. And where I get confluences or multiple Fibonacci lines overlapping each other is where I put these areas up here. The next one being 34.45. This one seems so far away when we were down here. Mm-hmm. No way to stock, everything's so bad, and the market's going to keep going down. But that's not true. Okay?
Well, the market may be bad.
I mean, look,
I think we all agree that there's been an unprecedented, colossal amount of market manipulation done on the part of our government and the Fed. So, you could have a market that is the worst fundamental market on earth, and if the Fed keeps doing what it's doing, they just won't let it drop. So, it looks like it's going to keep going. So, there you go.
And when it does drop, you take a look at the volume. Sometimes it'll make those really fast pullbacks and drops in price. If they're on lighter volume, you have to anticipate that we may bounce up just as fast as we drop.
Sure.
Okay. And sometimes intraday we call those V-shaped reversals.
I got a couple requests for you since you got your charts up there. Obviously, everyone's talking about gold, and I've got one from Adam asking about wheat. I don't know if you trade wheat.
I do. I charted wheat this morning on Click. I can pull it up. I have my Click platform up too, so I can show you what I have on wheat.
Sure. Yeah, just curious. Yeah, here's the question. Adam says, could you have him analyze wheat, and if we should be long at current demand that it's coming to? And if I'll share mine real quick while Jeff brings up his platform. I'm looking at it, and I think what you're referring to here, Adam, is this area of demand down around 494. I actually like that level. I think you can't jump in yet, and this is the challenge. As we look at a number like 500 coming up right now, where a lot of people think of whole number psychology, but I would put more emphasis on the demand zone out there. And yeah, there you go. So Jeff, you got it up on TradeStation. I'll bring your screen up for us.
Yeah, I'm going to bring up Click. This is the one I charted with this morning, coming out. One of the zones I have coming in play right here is that 501 area. Oh, sorry. 496, yep. 489. A little rally formation on that. What remains to be seen is this move up here was on speculation that things are going better with China, and they made a big purchase on wheat. Okay, it also was a timing where we saw some of the shorts had to cover and right around contract rollover. So there was a lot of dynamics that caused this big move up. Much of it was a short squeeze and the anticipation or news release that China was purchasing or making good on what it said it would do as far as the trade talks.
Right. Yeah, I like your zone. I'm right there with you. So, Adam, I agree with his numbers there. I do like that demand zone we're coming into. Certainly at this moment, I don't like wheat very much, but, it's about waiting. And, the easiest thing you can do is just set yourself a little alert down at the bottom or set a line there and set an alert on it, and good to go. What else? We got Richard's asking about crude oil, which has been an absolute snooze fest if anybody's trading the @CL. It had those monster moves, now just going sideways. Personally, I do see it getting, breaking and heading up here just because of the prevailing trend and how long it's kind of making higher lows, although it's taken forever to break through that 42.50 mark and close above it. What's your thoughts on oil going forward, Jeff?
Wow, this one has become such a tricky industry since that catastrophic drop that it had, and getting down to that area. So this one has been something I've shied away trading on the larger time frames. The smaller time frames, getting down to maybe a 60-minute chart would be a little bit more manageable for me.
Yep.
To get a better picture of it.
And there's opportunity, when you go to a 60, because it has intraday swings. It's just when you look at the daily, it's like, if that was somebody on a gurney, their flat line take them to the morgue. I mean, it's like doing nothing on the daily.
Absolutely. And I am seeing that this is more of a trader's market for this product now, simply because of what happened with that big move down that we had. Now, we have seen some like this drop over here that happened on the 30th of July. This was just like the market was falling out of bed, and then all of a sudden they found that demand and just ripped it right back. So there is some manipulation going on here. There's some controls in place to keep oil at a specific price. I think we're in that trade range for the most part. Let's just jump out to a 480-minute chart, and we can see that we're kind of trapped in between kind of a range. Okay? Sorry, my charts are a little slow right here.
No worries.
They've been working all day since 3 a.m. prepared for different classes and things. So
you're a busy man.
Yeah, here it is. We've been in kind of that tight channel, slightly upsloping. Taking long-term positions on it, you need to be able to sit through the different wiggles. Okay, and the smaller time frame charts are what I'm really paying attention to. But keep in mind, this time of year, you're going to see that there'll be more purchases of crude oil, natural gas, and heating oil in accumulation phase. So seasonally speaking, we should see these products climbing like this, even though the inventories are getting bigger. See, they have to stock up that inventory in order to have product to sell during the winter months. So this is where we see some of that accumulation. And there are some websites out there that can help you with the seasonality of these products so that you understand, even though the inventories are getting bigger, you're not going to get whacked in when those reports come out every week.
Right.
You're going to understand that typically this time of year, this happens. Okay?
Right.
Kind of like live cattle. Live cattle is one of those products that have pulled back into a demand zone. Nice, steady eddy trend to the upside.
As you keep your chart there, this is actually kind of perfect because I'm going to go back and forth between two charts. So the viewers, you guys see crude oil here, and there was a comment that came through from Brandon, and I echo this one, and certainly I feel this way. It says, weaker U.S. dollar is bullish for all commodities, including crude oil. Guys, Jeff has a 4-hour, you got an 8-hour time frame on there. I'm going to switch over on to the other chart here, and I've got a weekly on my screen. You guys notice now this is crude oil on the weekly. Crude oil has come right down to that area of demand we've talked about in this program. Now, we did a double tap on it. It's actually the second week in a row. It's been sitting right in that area of demand between 92.59 and 92.24 on the dollar index. To me, that is a sign that there could be a potential bounce in the dollar. If there's a bounce in the dollar, that actually would bode negative for crude oil. And it's a conundrum because I find myself at this exact moment being very bullish on crude oil, simply because it's consolidating after a really aggressive move up. It also has been making higher lows and pounding its head right against that 42.50. If the dollar continued to fall, that would further bolster my argument for a bigger move up and hopefully closing that gap on the dollar or on crude oil, which has not happened yet. But this dollar chart is troublesome. And the reason I say troublesome is because the dollar index was up over 102. Now it's at 92. That is a colossal drop in just a few months on the dollar index. That should have had a much bigger impact to the upside for crude oil. I mean, it's certainly working for gold right now. If you guys look at that dollar index, we can bring up the gold chart, and you can see that the real weak dollar is, so that's crude oil, real weak dollar,
Yep.
really helping gold. That's also the flight to security trade, and also just the fact that it's gold and it's awesome. Does that trouble you at all when we look at that crude oil chart and you notice it really is just traversing sideways and the dollar is like in a free fall?
Well, yeah, I mean, you're absolutely correct on that. I've been, like here, the equity indexes have been going up. We looked at crude oil going up, and then I have basically this area here. Doesn't look like this area here where we got a bounce on a small time frame is going to hold. This is the dollar index, and I'm looking for the dollar index to drop down to 91.40, 90.75. At that point, I'm expecting the Euro USD to be up in a supply, which I don't have marked here. And that's when we're going to start to recognize some of the changes. We'll start to see some of the changes in crude oil. We'll start to see some of the changes in the commodities. We're going to make that kind of shift. It's coming, but our key indicator, I think, right now is paying really close attention to that dollar. And that dollar dropping into that demand zone. And we saw what happened just the other day when the dollar had that bounce.
Yeah.
Okay? Now, it was a small bounce right here. But that bounce caused a nice significant down day as the dollar and the equity indexes have been kind of inverse correlated. So if we did get another strong drop into this area, this is where I'm going to change my opinion about being very bullish short term and look for the dollar to change. And keep in mind now, during this change, during that Y2K bubble, as everything was running up, the last melt up phase that we're talking about here, the dollar was actually going in the same direction. So if the dollar starts to correlate with the U.S. markets, we might be in that melt up, the strong momentum phase, as more and more money pours back into the U.S. Okay, so the dollar and the equity indexes are inverse at the moment. When things really start getting heated up in the U.S. markets, you're going to see money pouring in, not just from the U.S., but from other countries, because they're going to say, hey, I can make more money in U.S. markets than I can make money in, in our European markets. Let's move some money over there.
Right.
And we'll see that migration. Of course, with the U.S. and the Fed putting another $1 trillion into the markets here shortly, and tomorrow will probably be that catalyst where we see that dynamic shift. I mean, it's kind of the 11th hour. Are they going to do it, or are they going to not do it?
Right.
And so be very careful with that. As fast as it goes up, it could come down just as fast. Okay?
Yeah.
So I'm very defensive right now. In fact, we closed several positions today that we had carried. I just have a few that I have still open.
Well, we went through a ton of information on that one. I always love going over all the market details. Let's see. A good comment here. Where was that? It just came through. Oh, boy. From Mario. So Mario, from one of my favorite cities, Bari, Italy. Yes, at least your last name is Bari. He said, it seems that many of the standard correlations are out of sync. For example, gold versus equities. I have to agree with you on that one. We've had this historical belief system that's ingrained in us from basic economics and basic finance. You go to any university and you get a business degree, they will always tell you that if the equity markets are selling off, you want to run to gold. And we've shown this picture repeatedly, but I'll show it again just for those who might be joining today. I'll put them side by side so you can see that this relationship, which used to be very closely linked, almost lockstep, is completely irrelevant now. There is no relationship whatsoever. They actually seem like they're running hand in hand. So on the top, what I'm going to put is GLD. On the bottom, I'll put SPY just so you guys can see that. This is a daily time frame, and the bottom is a daily as well. So they're both the exact same time frame. One of these, should be going the inverse way of the other. What's interesting is they're both going exactly the same direction. Gold really accelerating, which would lead you to believe these equity markets are headed for a crash. But Jeff, it seems to me that something's broken here, because both, actually, let's be honest, it seems like anything is just on a full-on rip-up, unless you're unless you're J.C. Penney's or Macy's or an online or regular retail stock, brick and mortar. Everybody else is at all-time highs or getting close and just ripping to the upside. Does it concern you at all that this historical connection is no longer in place between gold and the equity markets?
It doesn't. There's some other things that have been happening. That was just a few weeks ago. President Trump signed an executive order to put more money and more emphasis on creation of semiconductors and really ramping that up. Okay, so there are a lot of silver components, or the need for that precious metal in some of those components. So if we're going to keep this in the U.S., of course, that demand for that silver in order to produce products, and for some parts gold, okay, have kind of changed the tone. Okay, now I agree with you on the correlation and what is typical and what happens most often when everything is in balance. Okay, the important thing to know is when they're out of balance, what type of trading opportunities can they provide, and what information does it tell us about a potential change, and how are we going to capitalize on that potential change?
Right. Yeah, it's a tough situation to be, a tough thing to look at, especially for those that are in the metals area, just who use it as almost a leading indicator. And there's so many things that we use as traders to not necessarily help us predict, but to be, in essence, an odds enhancer. Something with the term we use on the Trading Academy is the odds enhancers. But really, it's something that's going to put more probability in your favor. And historically, that relationship between gold and the markets has been one. Also, the U.S. dollar has been one. And there's been a disconnect of those. So the challenge that we face as traders is we have to discount that when it happens. Like, okay, well, this is not normal. It's out of whack for now. Ultimately, at some point, it should return to normal, but who knows when that's going to be, and we just have to continue to trade price. And it's challenging because you know that one of these is going to come ripping down. If not both, one of them at some point is going to come ripping down because it shouldn't be going the opposite direction.
Some thing with bonds. Bonds have not been acting the same as these equity markets are making all-time highs and things. So there's, the way that the Fed is working behind the scenes may be causing some of those imbalances to correlate or inverse correlate when the norm is not to do that. So again, the Fed injection of the monies, the Fed participation is more than likely the cause for these discrepancies from the norm.
Yep, absolutely. Adam says, at the fast rate that these metals are moving, is it better to find the pullbacks to enter on smaller time frames? So, I would say, guys, it's very challenging because what you've had are these gaps, especially on like silver. I'll bring up the silver chart here. You've had multiple gaps over the past couple weeks where, it's just never come back. We've literally only had two red candles, and those two red candles were actually down days. The other ones were red candles on big gap ups and up days. So, how do you join back into this trend if you want to get in the metals, Jeff? It becomes rather challenging because they're just not stopping to breathe.
When the steepness of the slope is at this degree, I'm not doing anything. I won't. I know how hard silver can bite with just a small move. It's $5,000 per point on a futures contract.
Right.
Now, this type of move, I'm really not interested in. Okay, it's not my trading style. I wish I was in it, love it, but I know it's the most dangerous place for newer traders to participate in because in one moment it can wipe you out very quickly just by a small drop, okay, because of the leverage and the amount. So until we get a pullback down to a quality demand, and I don't even see anything quality that I'd be interested in till we get down to about 24.58-ish, that range, and then way lower where we had the consolidation before we had to move out, which would put us down about that 1865 area.
It's interesting you mentioned that. I'm looking at it and I'm even lower. It's I got to wait lower, and not unfortunately, I sold out of mine when it was around on 23, so I'm okay with selling out and locking in that profit. But yeah, it's tough to watch this thing continue to go. What I would encourage everyone to do is not get caught up in that FOMO, that fear of missing out, and saying, "Oh, darn it, I missed silver," because that's generally when things start to turn. Is when everyone gets that FOMO type of attitude, and these ones have been absolutely incredible market movers rare, not rare, but it's just, you don't see it too often where all of a sudden these metals are just the lead dogs and just blowing apart the markets. Richard says, Jeff, do you follow the news or just read the charts?
Yes. Look, we use every piece of information that comes at us. You know, when we're driving, it said, do you just look forward or do you look backwards and out the sides? Okay, yeah, we look everywhere. Okay, I pay attention to the Trump tweets. I pay attention to the news, the media. I do realize the dissemination of information and that things are most often priced into the market. So a sudden drop in the market is not everybody selling. It's generally all of a sudden everybody stopped buying. Mm-hmm. So when price falls, it's going back down to those orders that are still left outstanding. Or if price shoots up very strong, it is probably going into an area where they're looking for some sellers. Again, understanding how the mechanics of the floor work is there's a lot of these algorithm programs here, and the algorithms are designed to keep our market liquid. And when there's no liquidity, we get the biggest, fastest moves. Those moves set off all different alerts and people's activity to rush into the market, which then, again, brings liquidity and some volume back into it. But the algorithms are designed to keep our market liquid and processing orders. When one stack of the orders goes to zero, the algorithm clicks in and starts going, okay, sell, 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 sell until I get to a buy stack. And then it comes back up. Okay, so understanding that when a news event comes out, generally the White House already had that news event and it's already gone through censorship and then can be posted out to the media. The media usually will get any breaking news 45 minutes before the announcement in order to get their lines and get everything what they're going to say. Okay, and then approximately, yeah, then you got some news services that will come out and give you the news 3 minutes, 5 minutes early. If you pay attention to the things that the president says, when the White House gets information, this president has been able to get away with telling you what the announcement is already because it's public information to it. Mm-hmm. The announcement doesn't come out to the next morning or the next day, but once the White House has the information, it may be deemed that it's public information. And our president talks about these things. The other day, he told us what the PMI number was almost 24 hours in advance. Yeah. Okay, but the announcement didn't come out till the scheduled time. Then the markets did their thing. Okay, but there is a lot of the dissemination of information. Keep in mind, supply and demand is going to show you where the big money has unfilled orders. The advantage is understanding supply and demand and where those areas are on the price chart. And when the news or when price reacts to the news back to those areas, those become incredible buying opportunities. Yeah, even though it looks like scary as all get out trying to get in there.
Yeah, guys, I got a TraderMerlin question asking how to get in touch with Jeff. It's actually on the screen. You go to @JMANS111 on Twitter, and I will show you guys. Here's his Twitter feed right here. So if you want more information, you can go visit Jeff on his Twitter handle. He's got every day he posts pictures. He's got those charts we talked about today, and doing some market analysis on there and other information about other projects that you're doing. Now you're still doing XLTs for Online Trading Academy, right?
I am. I'm doing XLTs and I'm doing the GPS sessions and for our Online Trading Academy. I do have some private groups that I trade with, and I'm not trading their capital, but I have been, basically subcontracted to come up with their stock picks that they post. Mm-hmm. Okay, and they're building a website and putting together. My job is pretty small. It's pretty easy. I'm going through charts anyways. I might as well, make some money picking some good stocks for them.
Nice. All right. Well, I feel bad because I don't go into XLTs enough. I really should be going in there more often, but unfortunately, I don't spend enough time in there.
When you come into mine, make sure you're wearing a mic so that you can join in and we can really just talk. I mean,
nobody wants to hear me, man. Nobody wants to hear me go off in the markets.
I do.
Big Eb has a question, but I'm not going to really go into that one this time. What Big Eb is asking about election stuff and thoughts on output. We're early on, like we're still in early August. I'll tell you what, by October, I actually plan on having every guest answer. I'm going to ask a series of questions that are going to be very related to it, and we'll have a better understanding what that chaos is going to look like going into the election. But I really want to know things like, I mean, I don't care who you're going to vote for. Just make sure you get out there and vote. That's the important part. But also kind of how you're playing it, setups and things like that. But we'll do that later on. I think we got plenty of time to strategize, especially once we get closer to the election. So Big Ab, that's a great one. Hold me to it. I will make sure I do that in October. Will probably be when I start to really get every guest on the program to answer a series of questions about that, so you guys can start to paint a picture about what people are thinking. So what else is on your plate? I know you're doing teaching. You mentioned XLTs. You got a couple of other things going. Any other news you want to share with our viewers?
Next time I'll have some other announcements to share with you, and some other things I have working in the wings. I still plan on staying and working with Online Trading Academy, so there's nothing crazy going on in that field there. So don't anybody panic. I love teaching. I love trading. I like working with people, working with you, and building this group of traders helping traders. And my big kick right now is training people's eyes to see these different places on a price chart, and then kind of making sense of the language of the price chart and knowing where to look and start to document these things so you can train your eyes to see different places on the price chart that have been very reliable. And there's a huge misconnection with people using the left-hand side of the chart, and they just kind of study and study. Your subconscious picks up on these things, but your conscious mind doesn't. So we kind of need to bring those together so that the conscious mind agrees with the subconscious, or vice versa, okay, so that you can make a very well-informed decision that you've documented and verified 100 times.
Yeah, I agree with you. It's funny, when I first started off, I had no interest in helping anybody. It was really, get away from me. I don't want to share any of my hard-earned knowledge with you. I was just selfish. I was a complete ass back in there. I'm sure if you ask other people on the trading floor back in the late 90s, they'd say I was a total ass. It's funny. You know Roger Best, right?
Yeah.
So Roger Best always tells this story to his students where, Roger was my student back in late 1998, I believe. And, I told him all these things that you should be doing, and here's the rules. And he was on the trading floor one day, and I was having a bad day. I think I was losing money that day. And he's like, Merlin, he grabs me. And he goes, what am I doing here? I'm losing money. And I was like, well, you can't do that. It's not going to work. I just walked away. That was all I said to him. And he's like, what a jerk, what a jerk. But actually, in hindsight, he came back and he said, I did the right thing because I didn't need to say any more. He was doing the wrong thing. Why are you doing that? I don't need to give you a story on why what you're doing is not working. I told you what you're going to do is not going to work. So why don't you just explain anymore? But years have gone by, and I think this problem, it may have been the same for you early on. It was more about what can I do to improve myself and make myself better. I don't know. Now I'm at the point now I'd love to help everybody because it's. I feel like, why not? It's us against the major institutions in the big markets out there. There's plenty of fish in the sea for everybody on a daily basis. So I almost get a bigger kick out of helping people now than doing my own trading, although I love doing my trading. But there's fun helping others, especially when you guys start mentioning that you're doing well or other pieces like that. So there we go.
And of course, we know where all their stops are if we teach them the right way, so we can use that too, right?
That's it. Oh, we're ready. Yeah, like my big orders are going to take them out, I don't have that kind of firepower. All right, Jeff. Well, thanks for coming on. I know it was. I'm going to try to get you on more frequently. So if you hear me bugging you, I apologize. But the viewers keep asking for you. So I told them I'd get you on. I got to get some other people on the program here soon. But glad you can come on today. Thank you so much for joining us. I appreciate it.
Hey, thanks for the opportunity. We'll see you next time.
Sounds good. Take care. Guys, that was Jeff Manson. You can find him in the XLT sessions. You can also get a bunch of information. I had his Twitter feed up there for those of you who want to contact him via Twitter. He could use a couple followers. I'll bring that one up full screen for you. There you go. There you go, Jeff Manson. JMANS. That's actually 4 ones, excuse me. I had 3 ones on the screen. That might be the problem. It's Jeff MANS 1111. And then subscribe there. Cool. Awesome. Well, you guys have asked. I wanted to make sure I got him on the program, so thank you for asking me to get him on the show. I had to bug him a little bit. I'm also going to get a couple others. There was going to be, I'm just going to get Chris Manson on the program. I know a lot of you wanted to get Michelle Volmering on the program. She actually had a major disaster at her house. House caught fire in a lightning storm, so probably not going to be asking her to come on anytime soon. Let the dust settle down there. But keep the requests coming. Many of you have asked for specific people like the Don Fran show to come on. That was great. And if you have more, let me know. You can even request to them to come on the show. Just send them directly to me at TraderMerlin.com, and I will do my best to get them on the program. We could talk markets. You want to get Trump on here? Let's go. You want to get Biden on here? The good news is Biden won't like that because it's all remote. So we're about. All right, sorry. Let's see. I noticed I didn't polarize either candidate there. I'm not going to do that. Jay Omer says, what's the latest lawsuit? The FTC still has not signed off. They actually agreed to a tentative settlement, but they're just stonewalling. They're being jerks. Typical government overstep and oversight. I'm hoping that at some point there was talk about actually making a movie about it, which would be really cool because then you guys could see what really happens, not only from the legal perspective behind the scenes, but also about specific individuals that I've mentioned who are just complete scumbags and should not be allowed to practice what they do. But that's just different industry stuff. So yeah, right now their FTC is just dragging their feet. We were supposed to get an announcement a couple weeks ago, and they just said no, we're going to hold off. We're going to hold off. My guess is they'll do it just before they have to go to court because they do not want to go to court. If the FTC goes to court with OTA, they will lose. I'm part of me is looking forward to that, but I want the burden of all this stuff to just go away so we can get back to normal with regards to the education and just keep things going. Right now, there's just too many restrictions that the FTC unjustly puts on. So there you go. Yeah, Adam, Jordan Matthews is actually on the list. Get someone that works on Wall Street. Actually, a lot of these guys have worked on Wall Street. A lot of them have. You mentioned when we have Sam Evans on the program, his partner Dan Bustamante. He's a Wall Street guy. A lot of these guys are. Yeah, Don Dawson. You know what? Let me write that one down. I forget to get Don. Don Dawson is incredible. But yeah, feel free to reach out and solicit any guests that you want to see on the program. Of course, there's only one guest or anybody to do with his organization, which I want nothing to do with, and that would be Sam Seiden. So please do not even ask him. I could care less what that guy does. I hope he just disappears. Let's see. For tomorrow, let's go into your economic announcements. That's for today. Tomorrow is actually kind of light. Of course, it's a Friday. You guys know it's going to be a light date anyway. Here is the economic calendar for tomorrow, the 7th of August. Not a lot. You do have the Canadian unemployment rate, which is expected to be right around 11.1%. For the U.S., we have unemployment numbers as well, looking at 10.5% there. My guess is that number will change here as soon as we stop the $600 extra government stimulus. Now, I'm hoping that they do not continue to add that $600 stimulus on there. That would be not good, in my opinion. I think some of you probably heard my rant on this the other day. I have friends that are literally sitting at home going, I get paid more to sit on my couch than I do to go to work. So with that $600 stimulus gone weekly for unemployment, they are now incentivized to get off the couch and go look for jobs. It may not be the job they want, but you know what? We all have to find ways to work and get ourselves some employment out there. So I'm hoping that they stop that 600. That could be bad for the markets, but it might actually be better for the unemployment numbers as more people will start to go and actively look for work, right? Most people are not looking for jobs. They fill out the forms at the EDD saying that they are, but they're not actually going out there. Bob Dunn, yes. You know what? I talked to Bob a couple days ago. I will try to get him on the program. We were just talking markets and life. Scott McCormick, another great one. That guy, here's the problem with Scott McCormick. This isn't throwing shade at the guy, but he's a freaking genius. He's so unbelievably intelligent that sometimes when he starts talking, this show could be a 4-hour show. I'm going to warn you guys. It's like going to watch a Lord of the Rings thing. You think you're getting an hour and a half movie, and all of a sudden you're like, wait, are we 4 hours into this? Scott is brilliant, and he loves to talk markets, so I will do my best to get him on the program. That would be a good one as well. Sue O'Grady, you guys are putting some great ones. I'm going to make this list. Sue O'Grady and Scott McCormick. Perfect. All right, that's it for today. Again, you guys all know the way to get in touch with me. You can send in questions at TraderMerlin.com. That's the easy way to do it. I would encourage you guys to do that because I am going to have an all-question Q&A kind of show tomorrow. There were a couple questions that came up on some social media channels, which are great. It was actually in another Facebook group, which I'm usually not active in there. And a guy was saying, I just don't understand ATR. Can you explain it to me? And I thought, you know what? That sounds great. I'm actually going to do a bit of a segment on ATR tomorrow, average true range, because I think a lot of people have it confused on how to use it and its utility, and I think that that's a really good one to address. So I will look at ATR tomorrow. And of course, Todd Davis, yes, TD. He's so busy, though. The problem is I'm just trying to get Larry on, and Larry is so busy. He never comes on the show. Of course, he's got a couple new additions for his portfolio, which I saw yesterday. I'll try to get him on next week. I will force him to come on. Yes, we always need more likes. Actually, what we really need is more subscribers. That's the easiest thing you can do to help the channel out. But again, I love the little thumbs up there. Subscribe if you are new and want to learn more about these videos as they come out. That'll do it for today, everybody. Thank you so much. I hope you have a fantastic Friday out there. My guess is, I know it's a stretch. Tomorrow will be a down day. I think you'll see some profit taking going into the weekend. My goodness, it's just been too good. It's been too good, especially with some of those metals. People are going to want to lock in a little bit of profit. I could be wrong, but that's my bias going into tomorrow's trading session. Hope you guys have a fantastic day out there. I will see you tomorrow. Take care.